Hello everyone, my name is Salim and welcome to the Markets Breakdown Analysis for Wednesday, the 8th of November 2023. We'll be breaking down chart and show the exact zones where price will close for potential buys or close below for potential sells as well. So looking at the daily candle for Tuesday, the daily has been bullish at one point from the top wick, retraced, broke below the Monday daily low, and now more likely the daily will be closing bearish, forming daily resistance around 185, 150. Now, on yesterday's analysis, we anticipated to see as the daily candle retraced and formed a rejection to the upside, the anticipation was to see a further pullback on high time frame. And the confirmation we've had was based on how the weekly candle was rejecting. So how the daily candle is rejecting the upside, this is a weekly rejection zone on a weekly time frame. So what would be good to see actually is if this daily candle broke further down, breaking below 184.550, which is the current weekly low, and then we could say the daily candles closing strong bullish. Now, strong bearish. Now, this is not a strong confirmation for potential sells, I would say. We still need a better confirmation for the new daily candle to form, to respect this high, pull back, form a high, respect this rejection from Tuesday, and then break this low to continue bearish. And the reason why I'm saying this is not a strong confirmation is because when you measure the daily candle, the body of the candle, roughly measuring around 31, 32 pip range. So now to break down the chart and drop it down to the 4-hour time frame, and what we can see here is we have the most recent 4-hour support formed around 184.820. The most recent 4-hour resistance formed around 185.090. Drop it down to the hourly time frame, and now we can adjust the level of support to 184.740, the level of resistance to 184.980. Drop it down to the 30-minute time frame, and now we have a same level of support. We can adjust the level of resistance to 185. Drop it down to the 50-minute time frame, however, we can again adjust the level of support to 184.650 and the level of resistance to 185.020. So now to identify the no trade zone, and I would say based on the hourly, this is a really messy range. As you can see, the next level of resistance we have on the left is we have this hourly resistance, and this is roughly around 15, 19, 20 pip range. Okay, so then the next level we have is 14 pip range, and those ranges, when you look on the left, they look really, really messy. So what would be better to do is to wait for price to break and close above this 4-hour resistance formed around 185.330. That means price breaking out of this area for potential buys. And for potential sells, what we could do is wait for price to break and close below 184.650, meaning breaking below this 4-hour range, this hourly range, and then also the daily will be breaking its own low as well. So this is going to be the no trade zone. And now to look for potential buys. So going back to the daily, the first thing we can see here is there's nothing we can do with this daily candle. As we can see, this is a range. But the one thing we can see is this daily rejection formed, or the daily high, or even the weekly high formed on Monday at 185.970. Drop it down to the 4-hour time frame. We have a 4-hour resistance around 185.900. Zooming in and drop it down to the hourly time frame. Now we have an hourly resistance formed around 185.590. Looking at the 30-minute time frame, we have a 30-minute resistance around 185.620. Looking at the 15-minute time frame, that's the same level of resistance as well. So I would say the first target for buys could potentially be this hourly resistance, which is also the 30-minute resistance formed around 185.620. The second target for buys could potentially be this 4-hour resistance formed around 185.890. We can't really look any further up because we have a daily rejection formed on Monday. So now to look for potential sells, and sells pretty much they look really, really good, simply because of how this daily candle have clean traffic on the left. So starting from the monthly, the first thing we can see is we have this previous monthly resistance formed around 184.370. Drop it down to the weekly time frame, clean traffic on this weekly candle. Drop it down to the daily. Now the daily clean traffic, but the first thing I can see here is we have this daily high formed around 184.300. Drop it down to the 4-hour time frame. Now we have this 4-hour resistance formed around 184.230. Drop it down to the hourly time frame. See, still clean traffic on the left, but we can't ignore this previous 1-hour resistance as well as the 4-hour resistance. And then when dropping down to the 5-minute time frame, still clean traffic on the left on the 15-minute time frame as well. Apart from this 15-minute bearish candle doesn't really affect much because of how clean traffic we have on the high time frame. So I would say the first target for sales could potentially be 184.230, targeting the 4-hour resistance formed on the 31st of October 2023. The second target for sales, now let's have a look again. So the first thing we can see, let's have a look on weekly clean traffic on the left. The first thing we can actually see on a weekly is we've had these previous weekly rejections formed previously around 183.815, 820. Dropping down to the daily, now we have a daily resistance formed on the that was formed on the 1st of November 2023 around 183.860. Dropping down to the 4-hour time frame, now we have a 4-hour resistance around 183.950. Let's have a look on the hourly time frame. Clean traffic on the left. Wow. So again on the 30-minute and even the 15-minute time frame as well. I would say the second target for sells could potentially be 183.860, targeting this previous daily resistance formed on Tuesday last week.
Dominion Markets, your trading sanctuary.